And so we want to get some insight right now on these plans to save Greece and what would a rollover mean? What would a default look like? What happens in the currency markets? To give us that insight, Jeff Young, an analyst with Barclays Capital, is here on the floor with me. This latest report, 70% of debt rolled over for 3 years. If we see this happen, is it supportive for the euro?
Probably so. It would certainly reduce the risk of any type of near-term default. As long as Greece, the Parliament passes the medium-term fiscal plan, we've already pretty much had a commitment that the EU and the IMF are going to release the funds in the next tranche, and they'll probably also do another package as well. So this is one critical component of that second element, the next bailout package.
So do you think we've hit a low then for the euro?
I think it's probably a little bit premature to say that. We do have the votes starting on Wednesday, and these are all important. The support from the EU and the IMF is conditional, at least so far. If the votes don't go through, then there's going to have to be some sort of plan B.
Now, the euro crisis has been sort of a de facto support in some ways for the dollar, right?
Yes.
But it's going to be a key week in this country with the Federal Reserve officially ending its quantitative easing plan. What is the impact going to be?
That's actually a really good question. I think the markets really have had a really difficult time focusing on that. The Fed is not going to be withdrawing liquidity. They will just stop adding to liquidity.
They're going to keep the $600 billion
That's exactly right.
on their balance sheet. They're not going to sell it.
That's exactly right. But our suspicion is that even that might be felt as a bit of tightness in the market. We're already seeing funding pressures in some pockets of the market. The demand for liquidity in the private markets is fairly high.
Yes.
This is kind of a great unknown. I would add that when the Fed ended QE1 about a year ago, there was some tightness in the markets. The dollar did rally. We suspect that the same thing might happen this time.
When you say tightness, you mean more difficulty in lending?
Exactly right. For banks or other entities that want to fund asset positions, it becomes that much harder if the Fed is not adding more liquidity to the system on an ongoing basis.
So you say there are also a handful of currencies that haven't fully priced in the end of quantitative easing. Where are you seeing opportunities?
Well, I think in the near term, we're a little bit cautious on global growth. Not over the medium term. We think that the cycle is still up, but some of the currencies that have really got overvalued in this kind of environment, you'd want to be careful. We'd say the Australian dollar, the New Zealand dollar would be primary among those.
All right, Jeff, thank you very much.